My beginner's guide to day trading. I thought I'd just let you have a look at this today and let you have a look at a trading system and see if the trading system will help you manage your risk and help you get ahead in your trading. Guys, let's go into the office and let's go and show you this today. What's up, fellow traders? Let's talk about a beginner's guide to day trading. I would love to put a course together for you guys and have something that goes from the real beginning of getting into trading or Forex trading or normal day trading or whatever the case, and go through all the way to being a pro. But that's quite a difficult thing to do, and well, not difficult, but how do you balance your lifestyle where you do trading and you do videos and to actually put a course together? I would love to do that, but I'm not doing it right now. I'll think about it and I'll consider it because somebody did ask. But yeah, I'm thinking about it and we'll see how that goes, if we're going to do that or if we're not going to do that. But here we go, guys. I'm going to give you a beginner's guide as to how to make some money and how to trade in the stock market. Keep in mind, guys, that day trading is a 50-50 game. 50% of the time when you take a trade, it's going to win, and 50% of the time when you take a trade, it's going to lose. And the reason you're losing, or the reason you're struggling to get ahead, is, well, number one, if you're a beginner, it takes time to learn. You don't learn to be a doctor in one day or a mechanic in one day. It takes time. You need to learn about what you're doing. But even once you know what you're doing, it's still a 50-50 game. This is not something that you're just going to jump in and make money with, because that's what everybody seems to tell you, because you've watched all the YouTube videos that tell you get into trading and turn $50 into $1 million in a week, and that's just not going to happen, guys. It's not how it works. It's definitely not how it works. So what I'm going to do, I'm going to show you a system here today that'll help you manage your risk. It'll help you in the stock market, and it'll help you have an edge. If you watch all my videos, you'll see I reiterate over and over and over again the same old hammered thing, and I might become quite boring with it, and in fact people might even stop subscribing or stop coming to watch the videos because it's the same crap over and over again. But that's how you make money, guys. You do the same thing over and over again and you do it right, and if you're doing it right, you'll make the money. So if you keep going over it and you keep hammering on the same thing, eventually you'll hit the nail on the head and you'll figure out what I'm talking about, because it's all in the psychology. It's all about winning more and losing less. Guys, while we're here, before we get to the charts, trading is risky. 80% of traders do lose money, and if you don't like risk and you don't like losing money, please don't trade. Stop trading. Walk away right now, because this is not for you. This is a risky game. While you're here, pop down to my blog, the old secret blog, and go and check out my free trading idea that I put out every single trading day. And the reason I put it out is so that you guys can get an idea of what I'm doing. It's nice to know what somebody else is doing and you can follow the trade. It's not trading advice. It's just an idea. It's what I'm doing. So if you want to do the same and follow along, be my guest. While you're there, pick up your free Forex book that I put out there. It's free. It's enjoyable. It just helps you understand trends, things like that. It's a PDF. Grab it. It's for you and it's totally free. With that in mind, guys, let's have a look at how to trade the stock market and the best way to day trade or swing trade. Basically, I teach the swing trading methods because it's easier to show you, but you can use the same method whether you're investing, whether you're swing trading, or whether you're day trading. You can use exactly the same methods. Nothing changes. Guys, let's go and have a look. As this is a beginner's guide, I'm going to just show you the worst chart on earth, which is the US 500, the S&P 500 on the American market. And why do I say that? It's because this is the most difficult chart to trade. If you don't know where this is going, you've got no idea how to trade this, because it's just gone straight up. And when it's at such a high level, there's no one that wants to take a trade here. Everyone is scared to take a trade here. Why? Because you don't know when it's going to come down. But if you trade support and resistance, it actually just doesn't matter. Well, let me teach you what we do, what I do. We go to the higher time frame. In this case, it's the day. Once we're on the day, we make it more readable so we can see what we've got here. We don't draw our support and resistance in lines. We draw them in rectangles, because these areas are vague. They're not exact. You can't make an exact support and an exact resistance, because how does an algorithm or a market know exactly where a point is? Nobody does that. So we put it on a line chart so we get the closing prices. The closing prices are quite important. Now what you have to take into account is that the main support level is down here. It's actually quite far away from the price as it stands at the moment. So you wouldn't actually want to take a trade unless it gets to this level, but you actually can. All I do when I go to the higher time frame is I put in a major level. The major level tells me where we are on the big picture, on the macro picture. I'm not going to draw a resistance level in here. Why? Because this is going straight up in a flagpole formation. Be careful of flagpoles, they fall down. But there's no target. It hasn't reached a target. There's no top. So what's the point of putting a resistance level in if there's no top? This is effectively a resistance level, not a support level, because all it's done is it's come up here, bounced around and carried on going up. So this is continuing on up. If we go back to the bar charts, and the reason we use the candle chart is because when a green bar pops out of a support level and it confirms, that confirms a long trade, and vice versa. If a red bar pops out of a resistance level, then you've got a short trade. Clearly this wasn't much of a resistance, it's all support. At the moment the S&P is long, it's overbought, and it's all support at the moment. So you're only looking for support. You're not really looking for resistance here because there isn't any. Now what we do, we go back to the lower time frame that you want to trade on. In this case, we're going to trade on the 4 hour. Now you just got to bring this so that you can see what's going on. Now you see how far away that major support area is now. But what it tells you is that's where the support area is. So now you know exactly where that support area actually lives, and you know where you can find it. And when it gets there, you know you're in a dangerous area or you're in the main area. But in between that, you can take a whole bunch of trades on these demand areas. Now, supply and demand, go and watch my supply and demand video. It'll teach you how to trade supply and demand. I'm not going to go into a hell of a lot of detail right here on supply and demand, but if there's a demand area when you want to trade up, it's an area where the money is, where there's money waiting, and it usually has to come back to test that area, pick up the money and carry on going. It'll usually be in an area like this where there's strong green bars coming up after it. The vice versa is the supply area where you've got the red bars coming down and the little supply of money on the top. So what I'm going to do here is I'm going to draw in a clear demand area where there's some money lying. It has to come back and test this area. Now you might think, but it already did that. No, not actually. It didn't. You see, it missed it. It didn't actually pick up the money here. It picked up money a little bit higher, but it didn't pick up this money yet.
Watch out for our casual unlimited collection at 23 Merchandise. We supply a range of fashionable clothing made to fit all. Simply look for the merchandise link in the description to order your favorite product today. This is a product from Logical Trading and 23 Merchandise.
So this money still available and still there, still exists. Now if you go a little bit lower, there's actually another one further down here that you can pick up money from as well, and there's even areas here as well in between that, but these are major areas on the 4 hour. So if you were looking to take a trade on the US 500, rather than waiting for it to come all the way down to the top with a good stop loss, you could take a trade out of this demand area when it comes back to test it, because it will come back to test it. It normally will. What you've also got on this chart, which is quite notable, if you look at it on the 4 hour, there's a mini support lying right in here. Nah, I'm not even going to draw a line chart in, but there's a mini support lying right in there. So be careful of that, because it might hold it up and it might become relevant, because it's bouncing along in a straight line at the moment. It hasn't. It kind of seems to have reached its resistance, but you can't preempt anything, and there's no clear information to tell us that this is a resistance point, but it is developing kind of a sort of pattern here. Now what you have to be careful of with these patterns, if you look at this and you look at it in a bigger picture, it could be what we term as a flag pattern. What it normally does, it goes straight up in a pole formation, it develops a flag on the side, and it continues on up from there. They're normally continuation patterns. So you've got a kind of a flag developing right here. Normally what happens with a flag, that'll continue on up there and it'll break out and it'll continue on its upward trajectory. Vice versa on that is if it breaks through the flag and comes down, then you might end up with a bit of a crash down. So keep an eye out for the flag pattern. Some people call it a pennant. It is there, and it does exist. You don't need lines to spot them. You can see it's there, and it could be a continuation for a long pattern, which means this thing could go all the way to 6,000. But it'd be nice if it could come back down, maybe to the bottom of the flag. You don't have to wait for it to come all the way down to this demand level here. It did come down to here, it made the flag. Maybe it'll come back, test it again, back down to the flag support, and then shoot on straight up. So you might actually get a trade there. So if it bounces off there, gives you a green candle, that might be a worthwhile trade to take as well. So that's how we look at trading. But the big thing here, guys, is not about the system. The big thing here, guys, is all about managing the risk. Where you're going to put the risk. And that's the important thing. And where you're going to add to the long trade. Where you're going to make it bigger. If you get an opportunity to add to the long trade, do so. Because that's where the money lies at the end of the day. Okay? Not too difficult, not too hard. Watch the other videos. I keep hammering on the same subject over and over and over again, non-stop. I'm hoping that somewhere down the line, this kind of takes effect. You'll know that if it breaks down and it comes down to this main support, we can see that 5,000 has now become a huge support level for the S&P. So with that, I hope that somehow gives you some insight into trading with support and resistance. And it gives you some insight into the best possible way to manage your risk and to trade the correct way. The big problem with traders is they tend to change their system every 5 minutes. They tend to tweak the system because they're losing a little bit and they want to be winning. And it's all about the system. The system doesn't make you money. Your psychology makes you money. Lose less on your losers, win more on your wins. Watch my other videos. They tell you all about that. Guys, the system is just an edge. It's just an edge to give you a better picture of a high probability win. Because what you're looking for at the end of the day is the possibility of a high probability win and a low probability loss. You don't want to lose every trade. Nobody does. So you want the possibility of winning, but you've got to understand that in many cases, in 50% of the cases, you're probably going to lose the trade because it's like throwing a dart at the dartboard. There's no guarantees on any trade, and you have to become a good loser. You have to understand that when you're losing, get out, run away, and take the next trade, move on to the next trade, and make big wins on the big winners. So guys, that's the trading for today. And don't forget to watch the last video, enjoy it, watch all the videos, and understand the trading system, even though I'm beating on about the same thing. Thanks for watching, guys. Till next time, cheers and bye.